Hi, I'm Suan Bengoshe and you're watching the TTMF's Home Smart video series where we help you prepare for your home ownership journey. For this episode, I've got Ms. Marsha Ray-Liben and Ms. Mira Rupan from the Trinidad and Tobago Mortgage Finance Company with me to discuss interest rates on mortgages. Hi ladies, thank you again for joining me.
Our pleasure.
Interest rates on mortgages, tell us about this.
Okay, so TTMF's interest rates. We have three interest rates that we offer right now. It's 2%, 5%, and the 6%. The 2 and the 5% are for first-time homeowners only. Those rates are subsidized by the government. We administer the government program via these two rates. Now, the 2 and the 5%, the 2% rate varies by 0.5% every year on the anniversary date of the mortgage until it caps at 5% and it moves no further. The 5%, again, it would also graduate by 0.5% and it would cap at the open market rate, which right now is at 6%. Yes? So our rates are not fixed, but our rates are stable. We can promise stability to our customers, and that is important when you're taking a mortgage.
All right, you mentioned open market rate. Tell us about that.
The open market rate is the rate that is available to anybody for the purchase of anything, for any mortgage property that you want to acquire. That is the rate that we will offer you. The government subsidized rate is the rate. There are parameters that surround that rate. The 2% and the 5% rates are for first-time homeowners. Your income must be a certain amount. The property value must be a certain amount. So if you're not there, then you're on the open market, and that is a stable rate at 6%. So government subsidized rate or anything else, open.
And how does this differ from other financial institutions in terms of what TTMF offers?
Well, the other financial institutions offer, their rates are pretty low right now. They range between 4 to 5%. Now, as I said, our open market rate is at 6% and it's stable. What customers don't realize is that these lower rates that are being offered by the financial institutions are going to gradually go up. And they are going to go up to 8, 9, 10%, even more during the course of the mortgage. So what a lot of customers, they will find themselves in difficulties because of the fact that their income may not be going up to be able to support a higher installment. They stand the risk of losing their home, their biggest asset. And in addition, even if they try to maintain that mortgage, their standard of living is going to be drastically reduced. So whereas TTMF would work with the customer, they would let them know exactly what to expect, especially with the 2 and 5% interest rates. Our 6% rate, I'm happy to say, our rates started when TTMF was first established in 1965. Our open market rate was 9%. It dropped to 8, it dropped to 7 in 2012, and it dropped to 6 early this year. So what you would see happening with our rates has been trending downwards, not upwards, and they're very stable.
I think what is important for us is that our rate is not affected by market conditions. Our rate is almost declared by government decree. So they will say what our rate would be. So we look at what's happening within the organization itself, what the government wants to achieve, and that is our rate. So market conditions can fluctuate, but our rate is not affected by that. Whereas other financial institutions, that is what affects their rates. So when the cycle is down, the rates will be down, and when things change, the rates will go up, right? So that will affect how you will operate. There is always the thought that because our other rates, the government subsidized rate, the 2 and the 5%, that graduates, people will say that our rate also changes, but it's not the same. Our rate is a measured increase over a particular period of time. You know what that is up front. We tell you what it is. We explain to you what your mortgage is going to be from year 1 to 2 to 3. And so you can plan for it. You can budget for it accordingly, and it is a small increase. Our open market rate, it is the rate that is going to hold for the life of the mortgage. So that is why we are always proud to say that our rates are stable. Yeah, so that it can help you stay within your house over the lifetime of the loan.
And of course, you're making us aware of this when we come in to sit with you to get this process done.
Yeah, because if your rate goes up to something that you cannot manage, then you can find yourself not being able to keep the house because your income would not have increased enough in order to cover that increase, that increase in the interest rate over time. So yeah, so you need to be very careful about.
And as you said, as you mentioned that, now I'm going to ask you, what are some key questions that you can ask once you enter a financial institution to get information? What do we have to ask?
Is the rate going to change? When is it going to change? How long is the term of the mortgage? Mira, what else can they ask?
Yes, I think, whether or not you can make lump sum payments. That's also quite important. What customers need to understand though is that when your interest rates start to go up, and like Marsha rightly said, you stand risk of losing a home, or your standard of living is reduced. Customers don't seem to understand that when the rates start to go up and they're not sure how often and by how much, they stand the risk of losing a home. Now, what TTMF does, now our customers have financial difficulties as well. They may lose employment, they may have certain situations that arise that they didn't predict was going to happen. What we try to do at TTMF is we work with the customer. We work with the customer to help them keep their home, as opposed to, well, here what, you can't pay your mortgage anymore, goodbye, so long, farewell, which is the thinking of the other financial institutions. So we can assure our customers that we would do our very best to help you to keep your home.
Any final words for viewers in terms of those who probably today they're looking and then tomorrow they really have this appointment to go to the financial institution, they may want to change to TTMF?
Well, I would say that one, you need to do the research, but don't let the numbers fool you. A small introductory rate is usually just that, an introductory rate. It is a long-term investment, so plan your business for the long haul. So don't just look at an initial number. You have to make sure that you can sustain the payment of your mortgage over a long period of time.
Well, folks, thank you so much again for joining us for another episode of TTMF's Home Smart series. We do hope that you learned a lot. Stay tuned to our Facebook page and, of course, our YouTube channel for more episodes.